Tuesday. Just got fired. I thought it was just like a normal routine meeting. And no, it was actually we're not moving forward with your employment. And you know what's so funny is like when you think that you finally find like a good job and like a company that cares about you, you're like, oh my God, I actually work for people that care. No, you don't.
Breaking news as tax day is today, so do not forget that. And the dollar continues its downward fall into oblivion at the expense of mom and pop. Now, interestingly enough, this fraud that's happening in the Treasury market is all backed by the implicit guarantee of you and I. Americans are bearing the cost of inflation, not just at home from the Federal Reserve and the central appraisal districts, but throughout the world, thanks to organizations like USAID. Now, the Federal Reserve, and I want you guys to always remember this, does not exist to protect the financial assets of mom and pop. They exist for two reasons. Number one, and this is the biggest thing, to protect the banks, and number two, to lie to the public so that we continue to keep spending and ignore the ever clear risks. Now, fraud, which is the inflation, does not work. And we see that because the instability of these markets are absolutely killing mom and pop, their pensions, 401ks, and retirements. So in other words, we must end the Federal Reserve and the CADs in order to restore the balance sheets back to mom and pop. Now, today we're going to talk about all of those things and how foreign countries are actually in more control of our economy than the Federal Reserve itself, and how they can also completely annihilate the U.S. housing market. And you guys are going to find out today just exactly how they plan on doing that. This video is going to be absolutely bonkers. Happy Tuesday. Mitch Vexler, how are you, sir?
It's an interesting day for the market. It's completely sideways, but it gives us an opportunity to think things through. When I say us, I'm referring to all of us. And the 401ks and pensions that Travis was speaking about, unfortunately, they're involved in a matrix of fraud. And the matrix of fraud stems from the Federal Reserve printing money, and Travis alluded to that. But that's not just printing money for the sake of the U.S. use. It's for the sake of the world's use. And that it causes the inflation on the system, which causes the tax, all of which is a fraud, and all of which stems from the Federal Reserve itself on the federal side and on the local side from your central appraisal districts. Complex matrix, but it is reality, and the 401ks and the pensions, unfortunately, are at risk, especially to those who don't know how to hedge it.
Absolutely. And we're going to start this video off with our first segment where we're going to go more into the currency war and what's going on in the Treasury market. The Dixie continues to stay under $1, little bit up today, you guys can see, but mostly it is sideways. It was down, but it is under $100, at least from the recording of this video. Now, interestingly enough, the Chinese yuan offshore, when compared to the US dollar, is actually, I believe this is at a historical low or a new low. The yen is also down today. This is the one-day outlook. You guys do know that I recently invested in silver during this downdraft you see right here, and it is up to over $32. So that was a wise decision so far. This came out today titled Trump Tariffs Drove a Treasury Sell-Off. Who sold the safe haven asset? Now, I want to read these 4 bullet points. Speculations about China unloading treasuries as it means to hit back at tariffs levied by U.S. President Donald Trump have been raised by some. And that may not be exactly what's going on here, maybe with mortgage-backed securities, and we'll get into that in a minute. Not everybody agrees with Beijing resorting to selling treasuries. China selling down treasury holdings would effectively be shooting themselves in the foot. The incoherent and volatile nature of policymaking is significantly denting the appeal of treasuries as a safe haven. Should the markets treat issues with the U.S. deteriorate it could catalyze into another wave of sell-offs. The US market over the past week saw investors fleeing the safe haven in an unusual move that added to the market turmoil caused by the president and his reciprocal tariffs. In just a few sessions, the yield on the 10-year Treasury soared, and this was on Friday, to almost 4.6%. That's the highest since February. Now, similarly, the 30-year Treasury bond yield notched its highest since November of 2023, last Wednesday. While yields have ticked down lower since then, they still remain elevated. With recession fears mounting and markets maintaining volatility, the sell-off in treasuries was unusual, as during times of uncertainty, investors generally tend to flock to safety. So it's interesting that they flocked out of it. Could be a liquidity crisis. China shooting themselves in the foot. China is America's second largest foreign creditor after Japan, holding about $760 billion in treasuries. Now, when Mitch and I did a few lives last week, we said it's probably more about Japan than it is about China, because exactly what this says, if they do that, China would be shooting themselves in the foot. I think China is actually weaponizing the treasury holdings already. They sell US treasuries and convert the proceeds into euros or German bunds. That's actually very consistent with what happened over the last couple of weeks, he added. German bunds have bucked a wider sell-off in long-dated treasuries last week, with its 10-year yields sliding. So this next thing here is going to show you guys the major foreign holdings of US treasuries. So this is out of our hands. The Federal Reserve doesn't really have control of the treasury market when so many different countries have so many of the treasuries already, which, by the way, remember what I said, that's backed. Those treasuries are backed by you and I. Only the thing is I don't remember saying, hey, Japan, China, United Kingdom, Cayman Islands, Canada, France, Ireland, just go ahead and buy my debt into me. I don't remember saying that. But China's the number one, as you guys can see here, at about 1.07 trillion. It looks like China has, you guys see 760 billion. Number three is United Kingdom, which has close to the same amount of treasuries. I want you to remember that, as China sitting at 740 billion. So each of these countries has some type of control over our markets. Others suggested that selling treasuries will bite China just as much as it will hurt the US. A rapid sell-off will drive down the value of the remaining bonds, which means China would incur losses on its own investments. China selling down treasury holdings would effectively be shooting themselves in the foot. China selling down treasuries will necessitate capital being moved back into Beijing and spark an appreciation in the yuan. That will be the precise opposite of what Beijing is going for, especially at a time when government is hoping to stimulate the domestic economy and cushion the blow from tariffs. The role of Japan, the largest holder of US debt, has also been called into question. The policy chief of the country's ruling party has reportedly emphasized that Japan should not intentionally sell its treasury holdings. Interesting, not intentionally, but if they need liquidity and those treasuries aren't levered up, maybe that's what they will do. After an opposition, a lawmaker floated the idea of using treasuries as a negotiating tool in bilateral trade negotiation. That's very interesting. So some people may start using those treasury holdings to negotiate trade deals. One analyst flagged that Japan could actually be the bigger culprit in the treasury sell-off rather than China. It's all very well for the Chinese government to say, we're not going to sell US treasuries, but it's not the Japanese government that owns them. If the insurers are worried about US policy flip-flopping and want to reduce exposure, there's not a lot the government can do. The selling could also have been fueled by a combination of European and Japanese pension accounts, selling long-dated treasuries to purchase European fixed income. That's interesting. Hedge funds and bond vigilantes. As the bond sell-off gained pace, hedge funds could have been forced to unwind bond basis trade. And we've been warning you guys, and we've been hearing about also that the next bailout may be because of these hedge funds and the derivatives market and arbitrage and all of those types of things, which in turn added more fuel to the selling. When brokers issue margin calls, funds could have been forced to unwind their positions by selling treasury bonds to raise cash. Interesting. These basis trades are commonly employed by macro hedge funds and involve borrowing money to buy treasuries while selling future contracts tied to these bonds with the aim of profiting off of the price differences. Greed and arbitrage is what you see right there. Monthly treasury data usually comes with a lag, and the most recent figures released in March are from January. April data is slated to be released in June. Given the scale of the sell-off and lack of clear and immediate figures, it's not easy to isolate specific parties driving it and to what degree market watchers told CNBC. In other words, once again, the Federal Reserve does not have control over interest rates and the treasury market. We're going to move on to mortgage-backed securities here in a second and how, these foreign countries can absolutely doom the housing market. But my first question to you, Mitch, and this may seem like a rookie question, but there are still some people that don't understand this. Does the Federal Reserve, and if you need to go back and you want to talk about some of those things, do that. But does the Federal Reserve have control over residential mortgage rates?
The answer is no, they do not. They wish to think they do. And to that point, just yesterday, Secretary Bessent, as the Secretary of the Treasury, literally said, if the Fed does not act, the Treasury will. Well, that begs the question, which is what I've been jumping up and down all about, including the thesis and the fact that I wrote, why does the Federal Reserve even exist? If the Fed does not act, the Treasury will. Well, Secretary Bessent literally just proved the case to shut down the Fed. Then the information you went through also proves the case that the Fed is not in control of what foreign countries do with the bonds. And who's jettisoning the bonds? CNBC's got it all wrong. Doesn't matter. This is a full-blown currency war. And it's a currency war due to manipulation of the currencies. So I want to point out a handful of things. First of all, the tariffs are the distraction of the week. It's Baskin-Robbins 51 flavors. That's all it is. Complete nonsense. The tariffs are a symbol of the cumulative fraud of printing money and subbing out cultures. This has been on the go for decades, including the creation of the European Union. And that is all done at the cost of the American standard of living. When inflation ramps up, as it has been doing, the standard of living goes down. And it's all due to the currency manipulation on one hand that's being done by China, which is driving the yuan down to its all-time low. That's being done on purpose. That's not by accident. And yet, our Federal Reserve keeps printing money, not just for the benefit of the United States to get the banks out of hot water, but for the purpose of supplying that money across the globe. The currency manipulation is to the downside, and that occurs as a direct result of the manufacturing hubs, of which China is one of the largest, if not the largest now on the planet. Not that for long, with a little bit of luck, but you have to understand what's going on. This is what those documents, all the press, cannot talk about, do not talk about, do not understand, and that's why they're a complete waste of time. There's a cost of being the world's reserve currency. And that cost, unfortunately, is part of printing that money. Should we be the world's reserve currency? Should we be the only currency, as in the hedge money currency? Time will tell. But when you have countries like China that are supplanting their own currency, devaluing it, that raises a very important question, which is why you're starting to see these kickbacks from our government saying, no, we really need to increase these tariffs in order to help balance off the trades. So our country printing more money means that more goods and fewer dollars are within the US border because we're shipping that money out. So countries with a trade surplus typically buy US treasuries. Well, who's got the trade surplus? China. How much did they buy in US treasuries? 4 trillion. And that is what, in theory, keeps rates down. What you're starting to see in the market is a complete dislocation because of the problems in that China has kept their currency low, artificially low, for so long. Our trade imbalance has gotten out of hand to the tune of 1.8 trillion worth of deficit on our US national debt. And that doesn't even touch the unfunded liabilities. Reversal of the trade deficit means that those with a trade surplus must sell treasuries for dollars to buy goods. Rates go up if the US exports more goods and imports more dollars, meaning more dollars and less goods. These things are all connected. This is what the press is completely missing. Rising rates and hyperinflation could result, if not handled in a truly balanced manner, with the stated goal of credibility. So is our government stating the intent? As far as I'm concerned, as far as I've seen so far, no, they're acting, but the message isn't clear. If the message was clear, you wouldn't be seeing these massive gyrations and fears of the press, unless the press is completely just making it up on purpose, which in the case of CNBC is a high probability. But the point is, the public shouldn't be deluded into listening to what the press has to say when they don't understand the mechanics under the hood. Overpulling the lever by our government in the form of a tariff as a negotiation tool has nothing to do with the trade imbalance, or having nothing to do with the trade imbalance, could have unintended consequences. State the goal. If you state the goal that the Chinese yuan is being manipulated, all of a sudden you've got clarity. You've got justification for doing what the federal government, i.e. President Trump, is doing. Problem is, nobody that I've seen so far, and I went looking for it, go and look for the words Chinese yuan manipulation and type in this month. You don't find it. Tell the truth and you've got justification. Living beyond our means by virtue of the Fed printing money is what has caused this problem. As I've said, and Travis has said, the Fed's sole purpose since its creation was to backstop the banks from a bank run. That is a lie. It was to put money in the pockets of the banksters. There's no other way to look at this. They have failed at keeping inflation low. They have failed at keeping unemployment where it should be, let's say around 2 or 3%. They failed no matter what. We're closer to 10%. Bottom line is they have no right to exist. The thesis and fact, which is a document that I wrote and was published a few days ago on Travis's channel, that's got teeth. And it just like the criminal complaint that I wrote, which is, if there's anybody out there that can find anything that's wrong in these documents, please let us know. We'd love to see it. But here's the point. These are all government-backed documents. It's government-backed numbers, government testimony, government videos, government depositions. So if there's something wrong, state it. Were you lying then or you're lying now?
There's something wrong though, Mitch, the apathy. I don't know if you're going to cover that right now, but the indoctrination leading to apathy, confusion, frustration, I would say that's a clear problem as well.
It's a difficult problem. So what I've just outlined is literally the exact opposite and telling the truth of what you saw in the CNBC article. Well, a friend of mine this morning was talking about, well, President Trump doesn't like small business. And he was relating that to the tariffs. That statement couldn't be further from the truth, first thing. Second thing is, that's a clear indication that he's watching NBC. And this is a smart guy. He knows better. So the point of the matter is that there are actions and reactions. And all of this, these actions and reactions are a result of the currency manipulation that nobody's talking about. We cannot carry the rest of the world. We're not obligated to carry the rest of the world in terms of printing money, creating inflation, and putting it on the back of mom and pop. That is what has happened. The federal government needs to do a better job at explaining this, and the nationalism policy of which the United States of America was founded on nationalism. Why? Yes. That's the War of 1812, right? We weren't going to pay the taxes without representation. Well, you're right back to this exact same problem. You've got to tell the truth and say these people are manipulating the currency. That's their prerogative. We can't dictate what it is that they are going to do. What we can do is respond to protect our borders and protect our businesses. So somebody saying that President Trump doesn't like small business, they're freaking delusional. It's just the opposite. But you see, it goes to your point, Travis, about the apathy. If people listen to the press and don't do the homework and don't understand what's really happening under the hood, that is what leads to the apathy. They're being led by the nose. They're sheep being led to the slaughter. And that comes right back to the video we did 2 days ago, which you released yesterday, of why there's so many people living in their cars. They haven't got a clue what happened to them. All they know is, well, I earn $100,000 a year and I'm still living in my car, right? These things are happening at the same time. So you've got to ask, why is that? Well, the why is that is because you're listening to the press and you're being deluded in terms of something that isn't true. You're being taught something or not taught something in the case of the schools to basically be a slave to debt. If you're taught not to be a slave to debt and you're taught how to be involved in a business, then you're not subject to these problems, right? You've got control as best you can in your own life. That's the problem. You're being mistaught, and that's the issue.
Well said, well said. And what I want to do is I want to show the viewers the ramifications of all of this, especially when it comes to our youth. And we're going to listen to a young lady who just got fired, and instead of her, making videos about getting another job, she's decided to become self-employed, and she's becoming an influencer. And I want us to watch this video and, let's decide whether or not she's being dangerously optimistic or her optimism is necessary, and whether or not, if we get fired, should we become full-time influencers. And I'm going to tell you guys right now, you should become an influencer in conjunction with what you're doing. Like if you have a self-employed company, you should do it 100%. That's the key. That's the gold. That's the magic. That's the secret. Do those things in combination of each other. Don't just do it separately. I've learned that the hard way. Here's the video.
I just got fired.
When I was first fired, I was completely blindsided to be discarded so quickly without explanation. But now I'm laser focused on rebuilding my future on my own terms. Welcome to Fired and Fun Employed, my journey of rebuilding myself and going all in as a data and tech content creator. Follow along because each week I'll share my real story, the highs, the lows, and everything in between. And I want to normalize being fired because it happens to so many people throughout their careers. Getting fired doesn't mean that you're not good at your job or you're not a good person or you're not smart. Sometimes it just comes down to one thing: corporate politics, and there's nothing you can do about it. Getting fired doesn't always have to be a bad thing. Sometimes getting pushed out of a toxic environment is the best thing for you, and that's why I'm choosing to turn it into a positive. Have you ever been fired?
I'm going to jump into how the world can absolutely crush the housing market, but I just wanted to make a quick comment on that. I already told you guys, yes, being an influencer and doing videos can help complement what you're already doing or a self-employed company. But I'm going to tell you guys right now, being fired is not fun. And I hope this is not true. I hope she's doing well. But my first thought is, how much debt is she in? If she just got fired and she's going on cruises and she's going out to get drinks and she's playing around, having fun, I'm going to tell you guys right now, that's not normal. Okay, that's most of us are just going to get destroyed. Okay, we're not going to go have fun on cruise ships drinking martinis. That was not accurate. Now, I hope she wins, and I hope she tells us how she can get fired and have fun and make a lot of money. So I hope she wins. But I warn you guys right now, if you want to survive this and if you want to rebound, you got to go back to fundamentals. Discipline, saving money, and watching how you spend. Every penny that comes out of your pocket, it needs to be monitored. In fact, I didn't even do a video yesterday because my wife and I were rebudgeting and going over all of our expenses together. Mitch, before I go into the housing market, do you want to comment on that young lady and whether or not what she was saying was the right thing or the wrong thing? I guess it depends who's listening, but what do you think?
She's delusional. There's no other way to explain it, right? She's jumping from one problem into another problem. So where's the value that she's adding in a video by staying in a $500 a night hotel room and saying, isn't this wonderful? Where's the value? Who is she working for? Who's paying the bill? What is she adding to somebody's life that's going to help them? You think the average mom and pop can afford a $500 a night hotel room? Where's the value? The answer is there isn't. How many other idiots are out there just like her? Well, I can go and create a video. But you're missing the point. If you're not adding value in a business, then the business shouldn't exist. Where is the value? And as far as I can see, none. I could be wrong. There might be somebody out there that could pay for what she's saying. If I was betting, no.
I think, Mitch, that the value that I got anyways was it's fun to get laid off. Was that the value? That she's going to turn being laid off into being fun? Was that the value there?
I have no problem with somebody saying, I'm going to switch doing what I'm doing because I don't like it and I would be better off doing this. My problem is that there has to be value in it for a business to exist. You've got to manufacture something. If you're a content manufacturer, that's perfectly fine, but you've got to have people willing to pay for it. And just flitting around isn't going to get the job done, right? So if you're a guy who's a body man at an auto body shop and you can teach people, well, that's a skill. You can teach people how to do your skill. That's fine. You're a content creator and you're adding value. In this particular case, I don't see it. We'll see. I wish her well.
We got another CNBC article, and I'm bringing up CNBC because I just know how much Mitch Vexler loves me reading CNBC. It doesn't bring out the worst in him at all. But this is an interesting article, Mitch, from CNBC, came out a few days ago titled, "Here's How China Could Crush the U.S. Housing Market." A few bullet points here. At the end of January, foreign countries owned $1.32 trillion worth, not treasuries now. Okay, we're going into a separate problem now. U.S.-backed mortgage securities. And when I first read that, and it kind of hit me all at once, I'm like, my God, how do foreigners have any control or any ownership in our homes at all? How is this possible? What's going on here? The leverage, the fraud, holding everything together, is that what I'm saying here? Or 15% of the total outstanding according to Ginnie Mae. So, Mitch, and to the viewers, I just want everyone to pause a minute. 15% of mortgage-backed securities are held by foreigners. 15% of our mortgages are held by foreigners and are probably levered up and used as collateral and now injected in some type of Ponzi scheme. If China wanted to hit us hard, they could unload treasuries. Is that a threat? Sure it is. Selling of mortgage-backed securities, and again, not 10-year, 5-year, 2-year, 1-year treasuries, talking about mortgage-backed securities by foreign entities could further spook the mortgage market. Mortgage rates are rising sharply this week as investors sell U.S. treasuries at a swift pace. Mortgage rates follow loosely the yield on the 10-year treasury. Some speculate foreign countries could be dumping U.S. treasuries to retaliate against President Trump. We just read that. But there is another even bigger concern for both mortgage investors and the all-important spring housing market. What if China, one of the biggest holders of agency-backed mortgage securities, or MBS, decides to sell those holdings as well in response to the U.S. trade policies? And what if other countries follow? China has already begun selling some of the U.S. mortgage-backed securities last year, with a country's holding at the end of September down 8.7% year over year and down 20% by the start of December. Japan, which has shown gains in its mortgage-backed securities in September, showed a drop at the start of December. If China and Japan were to accelerate those sales further, and if other nations were to follow, mortgage rates would rise even more than they are right now. So it's kind of a double whammy. Most investors are concerned that mortgage spreads would widen in response to either China, Japan, and Canada coming in with a retaliatory objective. And this is why I keep telling you guys, maintain your purchasing power, maintain your credit, because odds are during a recession, credit tightening strangles us. So you got to have real good credit and real good purchasing power. Widening spreads means higher mortgage rates. The spring housing market is already floundering amid high home prices and weaker consumer confidence. Given the recent stock market rout, potential buyers are increasingly worried about their savings and their jobs, as they should be, but they should have been preparing for this for the last 2 years. A recent survey from Redfin found that 1 in 5 potential buyers sell stock to finance their down payment. So we can say that stock gains stimulate the housing market. To add to the pain, the U.S. Federal Reserve, which is a major owner of mortgage-backed securities, is currently letting MBAs roll off its own portfolio as part of an effort to shrink its balance sheet. And let me explain this real quick, guys. When there are countries and the Federal Reserve purchasing mortgage-backed securities, lenders can offer us lower interest rates because they don't have to make as high a yield. So again, if I lend you something and I'm only making a little bit of money, but I have someone right behind me willing to buy that and take that off of my books, then I'm going to keep lending and I'm going to keep making a little bit of money at a time. And I'm just going to keep it going because that risk, it's not on me. The risk is on you, right? Because we own Fannie Mae and Freddie Mac, don't we? Mitch, there's a lot going on We've discussed many reasons why what has happened right now is worse than 2008. Look at the derivatives market. Look at how much things are levered up. Look at how out of control everything is. Is it probable that we'll go into recession at the same time as consumer interest rates go up? Because the premise is, and I've thought this as well, during recession, interest rates will go down with prices to stimulate the economy. But if the Federal Reserve doesn't have control over the longer end of the yield that impacts consumers, it's starting to seem possible that we go into recession at the same time that interest rates skyrocket. Do you think that that is possible? Why or why not?
It's not just possible, it's already happened. So we are in a recession by the original definition of CPI. And the current definition of CPI is just one giant lie that doesn't take into account the compaction, devaluation of the US dollar. Over and above that, when you look at the interest rates, it's clear based on the bonds going down in this last gyration down and the interest rates going up. Well, that's an unintended consequence of the Federal Reserve. Then getting back to the CNBC article, they are, CNBC, being disrespectful of their own viewership. They're taking a political position. They're showing their bias when they say, well, this is the fault of President Trump. You couldn't be any dumber. This has nothing to do with President Trump. This problem that we're talking about here today has been festering for generations, decades, and that's due to lack of leadership. It was the US dollar that forced the growth of China. And it is the US dollar when the American government subs out its culture. It's not just us, right? This has happened in Europe, same thing. When you sub out your culture, you end up devaluing in the long haul your currency. Well, that's clear. And it's added and more complicated when you add in the Federal Reserve because they're printing money to keep the illusion of a standard of living going. But it's true that the standard of living has been going down, and therefore the printing of the money is nothing more than an inflation. There are things that can be done. When CNBC says, well, but you know, these mortgage-backed securities and these treasuries, they're held and they can be jettisoned en masse by these countries. I'm not going to say what the inverse of that is, because I don't want to be giving anybody ideas, but let me assure you, that knife cuts both ways. Let's leave it at that. Then, with regard to why these countries should play nice together, can you imagine a situation where the US government sits down with these other governments that are manipulating their currency and say, look, we all have derivatives, which are off-balance sheet methods of finance. And I mean off-balance sheet. This stuff is very hard to track. But it's in the multi-trillions, as in give or take 600 trillion. Wouldn't it be interesting if through the stroke of a pen in multiple countries, those derivatives were made to disappear? And yes, there would be a lot of banks put out of business. Good. It would also put the Federal Reserve out of business. Good. There are things that can be done. And I guarantee that is in the best interest of multiple countries, Japan, China, Brazil, to get rid of those derivatives. When the Chinese government started saying, well, we've got US treasuries and we're going to borrow against those treasuries and lever up, they create derivatives. It's not backed by assets. We have the same thing here. The US school district bonds, they go out, they lever the tax receipts. They're not backed by assets. The implicit guarantee of mom and pop is not an asset. So the point of the matter is, can you imagine a world where this is dealt with by serious people that can add? That's what needs to happen, or the system will implode, and it has to implode because there's no math on this planet that can pay off the debt. This takes serious thought and serious people. And unfortunately, we have a cacophony of morons in government. And the citizens have got to start electing serious people or the system will blow. And it's just a question of when, not if.
Mitch, I can imagine an economy and system where the politicians do the right thing and care about us as consumers. I can imagine that because a few years ago I used to believe in it. But unfortunately, since I've taken the red pill, I'm not sure if it was blue anymore. I can't forget this stuff now. It's crazy. Once you start going down that path and start understanding that we actually have been lied to, it's like you can't turn it off now. And so you learn so much, and then learning that can actually empower you, because once you understand what's going on, you can hedge yourself, appropriately, and understand that probably most of life, and I won't go into religion, is about your relationships and nurturing those relationships. At least that's how I feel. Speaking of which, we're gonna end the video listening to one more TikTok. I want to get your final thoughts. Now, this lady that's doing this TikTok, I'm gonna tell you right now, she's much better put together. You could tell that she's hurting because she just lost her job, and that's really what the reason I'm showing these TikTok videos is because people are losing their job right now. All this inflation, fraud, corruption, and greed is killing us right now. So listen to what she has to say, and let me know in the comment section below whether or not you like what she's saying. Listen to this, Mitch.
Y'all, my corporate job just fired me. I went in today all nicely dressed like I am, and they sat me down and told me they were letting me go. After 6 years at this company, I am no longer there. And you know what? I'm not even upset. Is that bad? Is that bad not to feel upset about the situation? Like, I've been getting questions from family, and they're like, "How do you feel?" And my response to them has literally been, "I feel free." The reason, before y'all even get, to thinking that it was because of something that I posted on here, it was not. It was because of budget cuts, and not only was I let go, but others were too. So yeah, that was still surprising to me. I mean, I immediately asked in my, I guess, exit, just want to make sure that this is not about performance, and they clarified this is not about your performance. This is solely based on, us not getting the grants and these things that thought we were getting, and us having to cut back. And so I had to write it all down as they were talking, because I had to make sure, like, what? What after 6 years? I know God has a plan for me. I've been blessed with almost 18,000 of you on this platform, and I am so thankful. I hope they never take this platform away, because I am so thankful for you all. And just know that it's about to come. Like, when y'all see me, just know. Just know it's because, baby, that job let her go. I'm gonna have more for y'all. I don't have much now. I'm still kind of in shock, but not upset. Feel like God puts you in certain positions in your life. He makes you do stuff that you wouldn't do. Like, I would have never put myself in this position to be even a little bit uncomfortable, but he did that for me. I just know there's something big coming. I know there's something big. So y'all gonna see a lot more of me. So get ready.
She seems to be taking it like a champ. Obviously, we know that through the laughing there is pain. She's uncomfortable, but I'm a guy that I constantly say your attitude and look at the name of the channel, right? Your mindset is so important. And it seems like, but not, you don't want to have the mindset that blinds you, right? Like if you're committing fraud, like these fraudsters, their mindset blinds them. So we don't want her to blind herself, but I certainly believe that her mindset is very strong, is very powerful. From what, I don't know anything about her, but she got laid off after 6 years of a corporate job because the corporate said they didn't get any free money. A grant is free money. So if their hiring was based on free money, yikes. In other words, you guys, don't trust who you work for. Trust yourself, not who you work for. Always remember that. Mitch, I want to give you some final words here. What are your thoughts on everything we've discussed in that video?
She seems to have a work ethic, which is good. I'm not a fan of these videos. I mean, I've said that multiple times when people go out and say, well, I got fired, and they're in tears and they're upset. You're kind of missing the point. If you're going to do it, then wouldn't it have been really interesting if you said, this is what I did for the last 6 years, and my company got grants because of what they did. Now you have the entire story. You've got a framework from which to start from. She clearly seems to have a work ethic, which is great. It's perfect. I mean, she'll bounce back. There's no doubt about it. But it's painful for anybody. And you end up taking the next step based on the video that Travis did that was released yesterday morning. when you understand how many people are living in their cars or looking for tiny homes or cottage homes or village homes as a ramification of downsizing due to being fired or one spouse gets fired, this is a problem. So some people bounce back easier than others. But if you're going to do that type of video, best you add some credibility and put things in context so the rest of the world can see who you are and what you're capable of.
Mitch, I want to get your opinion here. My viewers my OG viewers, I used to end all of my videos saying the same thing, basically how to hedge yourself, credit, income, assets, and how to increase those things. But what advice could you give young people or really anyone that's suffering on how to bounce back if they lost their job? Obviously, that blindsides almost anybody, and losing income while your bills are still due, it could bankrupt you. So how does someone bounce back from something like that?
The straight answer is have parents that give it. So when you look at the schooling system, where you're not taught to balance a checkbook, you're not necessarily taught vocational skills unless you go to a vocational school. You're not taught that these are the things that can happen if you don't have a good work ethic. All three of those come down to mom and pop overseeing the education of their children. And when you want to hedge something that doesn't cost money, to oversee the education of your child doesn't cost you money, it costs you time. It costs your intellect, but it doesn't cost you money. It's the best hedge you could possibly buy. You're hedging for the future against this type of problem. If you've got vocational skills, doesn't matter what they are, right? You could be a gardener, you could be an auto body guy, you could be a mechanic. It doesn't matter. You've got the skills. There's people on YouTube that are now having courses and teaching how to do woodworking. So what starts out as a hobby, all of a sudden turns into big business. It's all good, but you've got to have the foundation from which to start. And that foundation really does start with mom and pop at home giving a damn about their child's education. It is the best hedge money can buy, bar none.
Sir, thank you for that. I don't know about you guys, but I was super refreshed to hear Mitch say that. I don't ever know what Mitch is going to say. Mitch and I kind of go into this blind, so that's more authentic and it's more kind of fresh. So Mitch, I just wanted to say, at least for me, you did an outstanding job in this video. To the viewers, comment below, let us know how we did. Let us know if you have any more questions, and don't forget, comment, like the video, share the video, join the Empowerment Center. You can literally pause the video or you can keep it playing, go to the video description, and there are multiple links that I've made for you guys and Mitch as well that have free courses, free downloads, but none of that matters unless you empower yourself. So please do it, you guys. Now I'm going to get everyone out of here. Again, thank you for joining us. If you guys are out there just investing in your life, in yourself, in your work ethic, in your resume, in your credit card debt, and getting out of that, you guys already know. We wish you luck, and we hope you win.